All right, it is Friday, and as you know, on Friday we do our Friday financial wrap up with Mr. Michael Zuber. How are you, Michael?
Doing wonderful, man. Today's a fun day.
Absolutely fun day. Really excited about your live event for Saturday. The one rental at a time live event, obviously sold out. Also, super pumped for next weekend with Pace and Jamil, also Fresno, November 19th. Let's get into it. Today is Friday, November the 11th, 2022. CPI, what is it? What happened this week?
So CPI again is Consumer Price Index. It is probably the most quoted inflation reading, and as you'd have to be living under a rock to not realize that we've had really high inflation for quite a while.
Yeah.
And yesterday was a big day. For the last 4 months, I believe, CPI has been running hot, meaning exceeding expectations. For the last several months, the last two for sure, and possibly the last three, there has been a hope that CPI headline specifically was going to take a big drop, and it had been stubbornly high, holding over 8%. And today or yesterday, sorry, CPI headline came in at 7.7, which is significant for all kinds of reasons. First off, last month was 8.2, so it's a drop of 0.5%. Expectations were for 8, so we came in 0.3 under. And the trend in inflation headline is down, clearly down. More importantly, you're going to probably start hearing people talk about the acceleration in the drop, because the drops to this point have been slow, 0.1, 0.2. We just saw a 0.5% drop. So you're going to hear a lot of people talk about that. So I'm willing to say that the Fed is winning. The Fed had a good day.
Good.
I don't want people to hear the Fed is won. Anybody who is out there overly optimistic, declaring victory, I want you to sit back and realize we still have inflation at 7.7. That's don't get it twisted. Are they winning? Sure. Did the Fed have a good day? Absolutely. But they haven't won. There's more work to do. And then you see in this video, I'm wearing a green shirt over my sweater. And I always acknowledge when I get things right, but I do get things wrong. So here you go. 1 sec. Swing and a miss.
Swing and a miss, baby.
The reason I wore that shirt is just to acknowledge that for this reading, I was actually calling 8.3. So I was off significantly. And I have fun guessing. I have fun being right. And I don't mind being wrong either. My crystal ball is as broken as anyone else. So I have fun with it. I own when I was wrong, and I was wrong this time.
Okay. So let me just unpack that just a little bit though. And I'm going to use a car metaphor. I'm going to use the highway metaphor. We're all going 70 miles an hour. Traffic is moving and flowing. Right now, the Fed obviously is winning. CPI, it did slow down a little bit. A car metaphor, did we slow down to 50? Did we slow down to 60? Is it, we still have inflation, right? We're still going to see Fed hikes, right? Going into December.
Yeah, there's no question that we're going to see Fed rate hike. So if we're going to use the analogy of a highway, I think you have to assume that the speed limit on the highway is something under 3%. Right. I think the Fed historically is aimed for 2%. So if let's call 2.5, 65 miles an hour to use the highway, speedometer, we'll still going 150 miles an hour. We're not going 200 miles an hour, but we're still going 150. So I think that analogy is great. So yes, we are going marketably slower, right? 150 in this example is 25% slower than 200. But 150 is still more than double the speed limit. So, do you want to say we're winning? Sure. Are we still speeding? Hell yeah, we're still speeding.
Interesting. Okay, let's move on to layoffs. What did you see this week in layoffs? I know there were big headlines, tech firms, real estate tech firms. Let's talk about it.
Yeah, the layoffs have started. This is something that I had been warning about for quite a while. Meta, 11,000, 13%, Twitter, 50%. Tech layoffs are just started, unfortunately. There's a lot more pain coming. They've got to get their cost structure, their overhead right. Business is slowing. A lot of cloud software companies, There's just a lot more pain coming in tech, but I want to be very clear. I think there's going to be just as much pain in Wall Street. I think the big banks, people feeding the big banks, are going to have layoffs. Your mortgages are down 80%, IPOs are down. There's just not as much work to do. So Citigroup and one other firm has already started small layoffs, hundreds, but I would expect those to pick up going forward. We're heading into what I call the white collar recession, and it's very much like the dot-com experience I went through. It's the closest thing I see to this. It's very tech and finance. The real economy, right, where you make stuff, probably what doesn't feel this. But tech and finance is going to feel a big brunt, I fear.
Very interesting. Tech and finance layoffs, obviously. Headlines 13% for several companies. Question, do you see that to continue into the first quarter of 2023?
Not only continue, but probably accelerate.
Accelerate. Interesting.
Probably.
Okay.
Yeah.
Very interesting time, something to keep an eye on. Let's talk about the 84%. What is 84%? 84% represent?
So, as you know, I've been studying my market for 20 years. I read a lot, and I just saw a statistic that made me smile, right? This is, I've told you privately, and I think we've talked about it. Macro, I think the economy next year sucks. Micro, I'm excited, right? I've told you that. I was always waiting for some kind of metric or sign that what I'm feeling is right. And I got it in this 84%. Okay, what is the 84%? I think it was Yahoo Finance put out an article that said 84% of home buyers think it is a bad time to buy. So what does that mean to me? That means 84% of the market is sitting on the couch. And I'm like, yes. I don't like competition. I don't know about you, but homeowners can pay more. And now 84% of them are not in the market. Yes, I know rates are high. Yes, I know prices are high, but I don't pay retail, right? I find the best deal. I find a deal that works for my numbers. I closed on my first MLS-based deal last week. It's already in progress. I just loaded a video that goes live or went live yesterday about the progress. You can do great deals, and it's getting easier. I just had a conversation with my team yesterday while I was on a run. I had to take a break. They found another MLS-based property listed at 240 grand. It's a total dump. We wrote an offer at 130 grand. It'd been on the market 100 days, right? Listed 240. We wrote 130. They came back and said, we'll give you a 180. I'm like, no. I'm like, nope, maybe 160.
Yep.
So again, there are deals and sellers out there. I'm going to get deals done on the MLS. We're going to talk about them on my channel. We're going to document them. I don't pay retail. I write lots of offers. It just takes work, but I was so excited for me personally to hear that 84% of home buyers are out of the market. I'm competing with 16%. That is awesome, right? I don't mind competing with 16%. So I'm excited by that number. And again, that's very probably selfish and all of that, but I mean, I got to take care of me, I guess.
Well, it's interesting. I want everybody, if you're watching this, stay tuned, because at the end we're going to talk about the next Fed decision, but also just know one other thing. We're going to tie it down and talk about housing. We're going to talk about mortgage and really the opportunity here. So let's continue. Tell us, what do you see in the next Fed decision? What does that look like? How does it play out?
Yeah, so this is a very important point. So the CPI number came out at 5:30 a.m. Pacific Thursday. At 5:29, my best case or guess for next meeting was 75, a fifth 75 basis points. By 5:31, which is a minute after the reading came out, I had changed my opinion. It's now 50. I think the Fed really can slow down. Now, this can all change. We have one more CPI and one more jobs reading before they decide. But as of this morning, or as of yesterday morning, I now believe 50 will be the right answer. So we will get, some people can call that a pivot. They're not pivoting. They're just slowing down. So they will take us from 3.75 to 4.25. I now am even more confident that the terminal rate is 5%. Some people have taken it to 6. I think that's an overreaction and a mistake. I feel good about a terminal rate, terminal meaning peak. So again, I think we're almost done. I think we're almost there. So I'm feeling good.
Feeling good. I love it. So you're calling for 50 basis points in the December meeting
As of today. Yep.
as of today. And just to be clear, if we go back to previous episodes, originally you and I, we had talked about, you felt like 75 basis points is what happened in November. You nailed it. And then again, adjusting from 75 basis points to 50 basis points in December, based on the new CPI number, based on the temperament of how things are starting to develop as we get into November. Is that accurate?
Absolutely accurate. Well said.
Okay, very good. Let's finish with housing, the mortgage rates, opportunities, tie that back into the 84%. What do you see going forward?
So the big question I have for myself, and I don't have an answer. This is an important question. Have we seen peak interest rates? And when I say interest rates, I'm talking mortgage, because the 10-year note crashed yesterday, which probably means that mortgage rates will come down. And I mean, crashed. It went down like a quarter of a point, which is a wild reduction for a single hour. It's like nearly unheard of. And again, the other thing about mortgage rates is they've had a big cushion or margin between 10-year and 30 years. It usually averages 1.7 to 2. It's been over 3% for a while because they just don't know what's going on. So they're adding spread. I think there's a chance that comes in. I think there's more realization that the terminal rate's not 6, it's closer to 5. So is it possible we've seen peak rates? It's possible. Is it probable? I don't think so. I mean, do we get to 8? Maybe, but these calls for 9s and 10s, at least as of today, I don't think so. But 8, yeah, I could still see that. I could still see 8. But it is also possible, again, I don't say probable, but possible that we've seen peak rates. I mean, that number yesterday, again, I'm wearing this shirt on purpose because I missed it, was a really good number.
Yeah. And I want to tie this together. I think you're spot on. I think the 50 basis points, I like that, your interpretation. I didn't see that, but the thing I do see is that right now, this could be an opportunity for a seller. If you're looking to get out of a property, I think between now and the end of the year could be a good opportunity because things begin to maybe level off toward the end of the year. Am I reading that right in terms of rates and activity, maybe to level and stabilize a bit?
Yeah, I mean, that's all I've been hoping for, right? I've been talking rip the Band-Aid off because all I want is the plateau, right?
Sure.
Right. You're climbing up a mountain and we're going to be on this plateau for a while. Is it a year? Is it 18 months? Is it 9 months? I don't know, but we're going to be here a while. I just want to get there. And now, as of what happened yesterday, I think the plateau is lower than people expected, right? Some people were calling for 6. I never wavered and called 5. Yeah. If we get 50, that takes us to 4.25. So yeah, we're almost there, right? We can see the top, which is a good feeling, I think.
I love it. Well, folks, stay tuned. Obviously, Friday financial news wrap up. We're going to continue this conversation. We've got a great event. Michael is hosting a live event Saturday, tomorrow. Super excited to see you there. I think next week, let's do a recap of the event. Is that something we can do?
Absolutely. I would love that. We'll find time to do that for sure. Yeah.
I love it. Michael, have a great weekend. Thank you for all that you share and do.
You got it.